Shopify stock is down 75% from its highs. Is the stock a buy now? Welcome, I'm Eric, and today I'm gonna dive deeper into Shopify stock and tell you if it's a buy or not at these levels. The pandemic propelled Shopify stock to all-time highs in 2021 to $169 a share. But the economy opening and a bear market took the stock back to pre-pandemic levels of $24. Since the lows in 2022, the stock has bounced nicely back over $43 a share, nearly double from the bottom. And investors who missed the bottom are wondering, is the stock still a buy now? Is it too late to get into Shopify stock, or is this an opportunity right now? Let's dig in and find out. Shopify has been a monster growth stock over the years. Since it went public in 2015, revenue has grown by over 20-fold to $5.6 billion in 2022. In fact, Shopify stock has rewarded investors with over a 1,450% return in 7 years. So a $1,000 investment would be worth $14,500 today, or a $10,000 investment, of course, would be worth $145,000. But you don't care about the past. You want to know what's in store for Shopify's future. First off, how does Shopify even make money? Shopify's merchant solutions make money from a combination of tools: payment processing fees from Shopify Payments, transaction fees, Shopify Shipping, Shopify Capital, referral fees from partners, and transactional sales from point-of-sale hardware. 2022 was actually a decent year for the company. Of course, not so much the stock. And here are the year-end numbers from 2022. You can see total revenue increased 21% to $5.6 billion. That's 21% growth year over year. Subscription solutions revenue grew 11% to $1.5 billion. And merchant solutions revenue grew 26% to $4.1 billion. That's up 28% on a constant currency basis. One thing I like about Shopify's business model, which is unique to e-commerce, is part of their business is recurring by nature. And revenue for subscription solutions grew 14% in 2022, but monthly recurring revenue, or MRR, was only up 7%. And of course, I'd like to see the MRR grow. And I do believe there's opportunity for this as the economy improves. In fact, if you look at MRR over a 5-year compound annual growth rate, it's grown at 30% to around $110 million. Now, many people associate Shopify with small businesses, entrepreneurs, SMB. And although that is an important segment still, they're expanding much more into larger businesses as well. Shopify's merchant acquisition strategy really casts a wide net, and this is continuing to grow. Shopify is building mission-critical solutions to run a merchant's entire business at every single stage. From running a business end-to-end, reaching new buyers and driving conversions, simplifying logistics, and entering new segments. As you can see, Shopify's offerings are robust and growing. Shopify continues to build mission-critical solutions to power the future of commerce, bringing more merchants of all sizes to its e-commerce platform, including favorite brands like Mattel, Supreme, Black & Decker, ButcherBox, as well as notable celebrity brands such as Skin by Kim Kardashian, Feastables by Mr. Beast, and Jupiter by Pharrell Williams. Here are some other favorite consumer brands that use Shopify: Figs, Gymshark, Tupperware, Netflix, Allbirds, Nestle, Reebok, Bombas, Heinz, Steve Madden, Lord & Taylor, Crate & Barrel, and many more. We love flywheels at Fired Up Wealth, and Shopify has a very strong flywheel. This flywheel helps fuel future growth, from more merchants to economies of scale, adding solutions and increasing GMV. Round and round the wheel we go. Where we stop, nobody knows. Shopify laid off about 10% of its workforce in 2022, which proves the company was overly excited about its growth potential. But it's also a sign of the times as companies become more conservative in a tougher economy. Shopify also changed its COO and CFO. So you could easily look at that and become very bearish over it, or you could look at it and say, hey, the company's trying to improve and try to get better. This is definitely one of those stocks that's polarizing, bears versus bulls. I personally personally am bullish on the stock long term, but that is long term, and I'll explain more later. And why am I bullish on Shopify stock? Let me tell you. For one, its market share is only 10% in the United States. Management projects their total addressable market is about $160 billion. And right now, the stock trades around a $55 billion market cap. I believe that Shopify understands their long-term growth potential. And although the company had layoffs last year and executive management changes, it still continues to invest in the future growth of the business. For example, Shopify paid $2.1 billion to acquire a company called Deliver, which aids customers in end-to-end logistics solutions, including fulfillment. Merchant benefits include the following: multi-channel inventory management. So merchants will have a single place to view and ship their inventory to different sales channels, including Amazon, eBay, Walmart, and platforms like Google, Facebook, Instagram, and TikTok, and I'll talk more about this later. Also, greater alignment between inventory supply and demand. Merchants will have their inventory automatically positioned near demand and fulfill orders from the closest possible warehouse utilizing proprietary software that predicts where customer orders are likely to come from. More flexible, independent logistics services. So merchants, whether or not they use SFN for fulfillment, can mix and match key services such as storage, freight, inventory preparation, returns, and so on. Shop Promise. This is a new service that offers consumers reliable 2-day and next day delivery options across the United States. Shop Promise utilizes an expanded network of partners and carriers and guarantees merchants full ownership of their brand, as well as business intelligence and customer data. And additionally, Shopify is moving more into point of sale, including offline, to compete with companies like Square. Shopify is also expanding globally, and there's huge potential for growth internationally. To add perspective to this, in 2022, Shopify enabled $28 billion in cross-border sales. And here are some other global stats from 2022. And this is important. They completed the rollout of Shopify Markets, as well as Shopify Markets Pro. Now, this is a native end-to-end borderless payment solution. And this enables merchants to sell in over 150 countries overnight. It also launched Shopify Payments in the Czech Republic, France, Finland, Switzerland, and Portugal, expanding the availability for Shopify Payments to 22 countries. They also launched Shopify Point of Sale in Belgium, Denmark, Finland, Italy, Spain, as well as Singapore, bringing the total number of countries to 14. It also launched Shopify Capital in Australia, expanding this segment to 4 countries. Lots of room for growth here. And finally, they introduced Shopify Shipping in France, Italy, and Spain, expanding this segment to 7 countries. So gross merchandise value, that's GMV, this jumped 12% in 2022, bringing the number to $197 billion. This is up 16% on a constant currency basis. And total revenue soared 21% last year, even with a tough economy. Gross profit dollars rose to $2.8 billion in 2022. That's an 11% increase from 2021. So with almost $200 billion in GMV, this puts Shopify in a category alongside massive retailers like Amazon and Walmart. And of course, Shopify falls well behind Amazon, but Shopify is actually number 2 when you think of total sales in the United States for e-commerce. As online shopping continues to become the norm for millions of consumers globally, and as Shopify continues to make easily accessible tools for businesses really of all sizes, I don't see a reason why Shopify will not continue to grow further. One of the big things that really sets Shopify apart from its competition is its partner ecosystem, especially when you think about the influencer community. This area is experiencing exponential growth. According to research firm Markets and Markets, the global market size for influencer marketing was $6 billion in 2020. Now listen to this. They expected it to grow at a compound annual growth rate of 32% to 2025 to over $24 billion. Now that would have been a whopping 400% growth in 5 years. Of course, that data was from 2020, so let's look at more current data. Of course, the pandemic fueled this growth, and now the influencer marketing industry is set to grow to approximately $21.1 billion this year in 2023, nearly already at that $24 billion number 2 years ahead of schedule. And you can see all the partners that Shopify works with. This will have strong pull-through and long-term network effects. I also like the opportunity that Shop Pay brings to the table longer term. Shop Pay is an accelerated checkout checkout that lets customers save their email address, credit card, and shipping and billing information. Of course, this saves a lot of time and it makes it simpler for people to buy. And customers love simple, fast, and easy. And ShopPay will help with retention as well as attracting new customers. In addition to this, Shopify recently integrated Buy Now, Pay Later with its Affirm partnership. And Shop continues to add new products such as supply chain and even ad tech solutions. So when you look at the investment highlights, of course, it's a large and growing opportunity. Massive global market with accelerated e-commerce penetration. It's a merchant success-based business model. And what I like about Shopify is it works for a small business. Like I could use it for Fired Up Wealth, or large companies can use it as well. And they've really scaled that up over the years. They also have mission critical solutions and multiple growth vectors. So when you look at growth opportunities, it really is across merchant segments, geographies, channels, and products. So in closing, do I think that Shopify stock is a buy now? Of course, this company grew very quickly, and the pandemic really fueled the growth. It went into hyper growth mode, and it was growing fast before the pandemic as well. And then, of course, it was faced with external headwinds, a weak economy, and inflation. And when a company experiences hypergrowth, growing pains are not unusual. And you, of course, could argue that the growth rate is going to slow down from those 1,450% gains in 2015. But it's hard to imagine a scenario where Shopify stock doesn't outperform the market over the next 5 and 10 years. But this is a long-term investment. So for long-term investors, $24 to $50 might be an opportunity to accumulate shares. But with that said, of course, the economy still has plenty of risk to consider. Lots of macroeconomic risk, lots of geopolitical risk, valuation. And so if you're a trader looking for a quick buck, this probably won't be your huckleberry. The stock trades around a 10 price to sales, so it's still expensive even at these levels. So if you're watching this, it really depends on you, what your risk tolerance is and what your time horizon is. And this may or may not fit your needs based on that. If you're a long-term investor with an appropriate time horizon, 5 to 10 years, I think Shopify stock is a quality long-term pick. But you have to be careful even at these prices. So in my opinion, if the stock takes another dive, that's where I'd probably be loading up shares. So I like this company long-term. I'm neutral on this price simply because of the 10 to price to sales. But I think that if you are a long-term investor and you bought the stock today and just held it for 10 years, you'd probably be pretty happy in a decade. But it's gonna have some volatility along the way and you might not have the stomach for it. If this was helpful, make sure you subscribe to the channel, click the bell for notifications, drop me a like, drop me a comment, have a great rest of your day. Take care.